We're good? We're live. Ladies and gentlemen, pre-earnings analysis, Apple, LYFT, CREE, Acadia, and much more. Not only that, a psychology lesson craftfully entwined within the Newsbeat Show. I am Mark Melnick, and yes, this is the Newsbeat Show. Good evening, ladies and gentlemen. Welcome to the Newsbeat Show. I have so many great things to talk to you about today. But first, by watching this video, you must pause right here on this screen, and you are agreeing to hold me, Mark Melnick, and T3 Live harmless and not responsible for anything portrayed on this video. Okay, let's just go right into it. Like I said, always going to show you the good, the bad, and the ugly. I'm actually going to talk about toxic trading today. Mark gave up a little more than 1% of his month. Now, most people would say, are we seriously having a conversation about giving up over 1% of your month? You know, as a talking head, Mark, you're only supposed to boast about these phenomenally high P&Ls, and you're never supposed to show weakness to a community. It's not weakness, it's a strength. And I'm going to explain to you exactly how this transforms my trading and actually tweaks it in minor ways. And this actually goes on throughout my entire career. Let's get right into the earnings, and afterwards we'll talk about that psychology part. Very simple here. T3 Live's #1 best free overnight earnings analysis. You want something for free that brings a ton of value to you. Besides for the Newsbeat Show, besides for the psychology we bring you, the huge fundamental analysis, the earnings analysis, we bring you so much value on these shows as we're approaching our 500th episode. It's mind-blowing to me that we're actually approaching that. All right, you followed every single trade I did. You bought it at the closing price. You sold it at the opening price. Again, you could divide or multiply whatever your bet is. You would be up about $35,000. Actually, I forgot to update T-Mobile on this list. Actually, that would be a minor loss, but I have a bunch of names that reported tonight into tomorrow, and I promise I'll update the list then. So that's just so far. Now let's go into what I will be adding to the list today, and that's going to be the interesting thing. And we're going to start off with Acadia, ACAD. Beautiful pharmaceutical name. You could see right over here, was it on their last earnings report? I'm going to go ahead and just pull it up for us right now. And I'm very bullish in Acadia's earnings report over here. The last time they reported was July 31st. They reported on July 31st, right over here. The stock closed at 24.58. Opened up the very next day, if you can't see that, at 26.09 and then spiked up to 29.32. Stock has been holding up beautifully recently. There was Deal Reporter chatter coming out of Deal Reporter, the news service, and we were able to capitalize on it. If you remember back in September, we did really pretty damn well on this one. And you have a lot of analysts with very high price targets that came out after the September 9th gap up. If you don't remember why it gapped up here, is they actually their phase 3 Harmony study met its primary endpoint. It was a double-blind placebo-controlled relapse prevention. I'm not going to go into the nerdiness of it. It ended up well. Wall Street loved it. Let's just leave it at that. The stock has been holding up ever since. You could just see right here this beautiful gap up on the name. It's been holding up beautifully. And let's just go ahead and talk about the earnings and show you why I'm going to be bullish. On their last earnings report, they went ahead and lost 38 cents a share. However, that was ahead of the loss of 45 cents that Wall Street expected. $83.2 million. That's ahead of the consensus of $72.12 million. Fair enough. How about for your future? What are you expecting Senor Acadia? Well, 320 million to 330 million was the raise in view from the company, and that's a raise from 280 to 300 million. So they thought they were going to make on average 290 million, and they came out and say, no, we'll make on average 325 million. And yeah, $35 million more than what Wall Street expected for a company like this is absolutely tremendous. I think they're going to do it. They met primary endpoints in their phase 3 study. And just for the record, I will be bullish on Acadian again. I will update this list, afterwards with all the names that I'm watching. I'll just update it afterwards and I'll show it to you afterwards so I don't just go and do it in between. So let's just talk. So officially on the record, bullish in Acadia, beautiful technicals, beautiful fundamental analysis. This is what I love. Apple. Okay. Obviously one of the most talked about names on Wall Street. Is it worth more than Microsoft now? It may or may not be. It's like neck and neck for most valuable publicly traded company on the planet, even though there are companies that are more valuable than it, like Saudi Aramco is looking for a $2 trillion valuation. So Saudi Aramco is supposedly worth as much as Apple and Microsoft combined, just to give you an idea of the obnoxious value. Hey, Melnick face, move over to the left. There you go, right over there. Okay, so looking at Apple here, very obviously controversial name. Let's go ahead and talk about the earnings. Let's talk about things like Apple TV, which are going to be coming out. Obviously, I don't think they're going to show any huge monetization from Apple TV just yet. That doesn't mean in the future they won't. And let's talk about their July 30th earnings, which were right over here. They reported earnings, stock closed at 208.78, and it gapped up to 216.37 the next day. Let's just go ahead and talk about that. They announced $2.18 a share. That's ahead of the consensus of $2.10 a share. And this was, again, back on July 30th. 53.81 billion. That was ahead of the consensus Wall Street of 53.39 billion. Okay, how about your future, Apple? And listen to these words carefully. They said they're going to make revenue of 61 to 64 billion. That's ahead of the consensus 61.02 billion expected. So they're pretty much saying that they're likely going to beat on revenues, is what they're saying. Now, granted, if they report exactly 61 billion, they'll miss the consensus 61.02 billion. But they're saying that's supposedly the worst case scenario. Their iPhone revenue plummeted. It plummeted to 25.99 billion in revenue versus 29.47 billion in revenue from last year. I will tell you right now, I do not like switching. I do not like fixing that which is not broken. I have this iPhone. I think it's a 7. My wife bought it for me for my birthday, the new phone, whatever. And I was like, yippee. And you know what kind of new features I love? Nothing, because it's the same damn phone for me. Now, again, they're talking about phones that have 73 and a half cameras, so you could basically, put padding around the edge of your phone, throw it up in the air, and take an aerial view picture of the world around you in a 7-mile radius. Short of magical things like that and photographers, that doesn't do it for me. I know they have the very cute commercial of the dog, and they show like that, the Lassie looking dog with like in the dark and it has nighttime vision. And I'm like thinking to myself, like, that's cool and all, but I'm not exactly exploring the Amazon forest looking for the very rare flying lemur, which is a nighttime nocturnal creature, and trying to snag a photo so I don't scare it away with my light. If I ever need that, the new Apple iPhone will be absolutely phenomenal for me, and I can't wait to get it. Honestly, their iPhone revenues have been going down for a reason because people like me are just so happy with the product. I just don't need to change it. Then, of course, all my friends, wife included, have a Samsung, and it's like they all swear by it. And look, God bless, whatever floats your boat. I use it for internet access, texting, and cell phone usage. Other than that, I could give a you know what about my phone. Oh yeah, and sometimes I take a picture, obviously, or a video of my children. All right. However, their services revenue went up 11.46 billion versus 10.17 billion last year. That's a positive trajectory. I am predicting that their services revenue are going to increase. Um, Now, of course, what I want to know is China. That's a very big focal point. Now, we all know they opened up a new factory here in the United States of America. What did they have to say about China back on July 30th? Well, they said they basically said that they're happy with their results across the board with a return to growth in China, and they're encouraged by results from their initiatives announced in January, including iPhone trade-ins. And if you don't understand the value of an iPhone trade-in, there's, at least what, $150 worth of raw metal, like smelting metal within this phone. Like there's gold in your phone, there's rare earth metals inside your iPhone. It actually has like true value, even if it's broken. So they did have a trade-in program and they were remaking the phones. Um, Tim Cook says he sees broader engagement with the services ecosystem in the China market. Excuse me, still a little sick. Um, and basically, when Tim Cook talks like that to me, and he's saying that the services revenue is going to be good in China, I take a look at that and I say, that's bullish. The only thing, and I'll be on the record calling it bullish, my biggest skepticism is that the son of a gun name makes all-time highs every other day. Today, for example, it decided to make an all-time high at 249.75. The market cap of Apple is absolutely stupid. It's stupid high. 1.099 trillion. Today, at one point, it was worth $1.1 trillion. You want to talk about value? And even with that, it has a P ratio of $20, valued at over a trillion. They have a 1.24% dividend. They earn $11 for all these shares. This is not an overvalued company. Every ounce of my FOMO wants to say, Apple's so expensive here. It is, and maybe it does gap down. I'll be on the record calling it bullishly. It's nice, beautiful technical setup. Who can deny it? It hits all time. You think I'm kidding when I say it hits all time highs every day? It hit an all time high on the 21st, the 22nd, the 23rd, the 24th, the 25th, the 28th, because there was no trading on Saturday and Sunday the next day, and then today on Tuesday. Every single day, Apple hits all time highs. That's what it feels like. No, granted, Mark, zoom back, not every day. Yeah, I know. But it feels like it. That's my biggest skepticism with the name. Other than that, I'm bullish in it. Let's talk about CREE. It's a semiconductor name, $5 billion company, obviously inclusive in the triple Qs. Little bit of a bearish setup for me here recently, and I tried to match the fundamentals. So let's see. And when I say fundamentals, I'm really not sharing, I'm trying to make it as mathematical as possible. Them being bullish on the chart is an opinion. Them being fundamentally strong, I'm taking the company's opinion, not my opinion. So it's a little more mathematical. Let's go ahead and talk about that. So um, they reported earnings on August 20th, right over here. And the stock opened up only a couple points lower, only to plummet $8 and get decimated. Stay tuned. We're going to have a very good discussion on toxic trading, and we're going to enlighten you, I promise. Um, so I'll be on the record calling CREE bearish. Why? For their next quarter, the one that they're reporting, whatever, either tomorrow after the bell or the day after pre-market, after market close or before market open on the next day, they said that they're going to lose 7 to 3 cents a share. 3 to 7 cents a share, negative 3 to 7. Wall Street expected them to make 15 cents a share. Hint. They said they're going to make 237 to 243 million dollars in revenue. Hint. Wall Street thought they were going to make 259 million. You want to add drama in China, you want to add in that the company is hurting, you want to add in some of the more hurting semiconductor companies. I will be officially on the record and put 2 thumbs down on this. Very simple. Next is LYFT. And this stock really needs a lift, tons of pun intended. Um, I was very bearish on Lyft since the open. In all fairness, very bullish on Uber since it opened. I'm talking IPO open. I was very bearish Lyft, very bullish Uber. But well, let's explore this Lyft as they are going into what is it, their second earnings report, I believe. It's their second earnings report, right? Or is it the three earnings report? All right. Anyway, either way, doesn't matter which number. They reported right over here on August 7th, and the stock actually gapped up. It closed at 60.29 and opened up 5 points higher. So this is a wild animal. The truth is, I have never used Lyft. I think I downloaded the Uber app. I think I used it once to like go to the airport because I'll just tell you, like, there's like local cab companies, like wherever you live in America, there's always a local cab company considering that, your nearest neighbor isn't 5 miles away. But like, I call up the local cab company. And I live in Jersey and I wanted to go to Newark Airport. The cab company is like $125 plus tolls. And I'm like, okay, whatever. I have to go. I can't, I don't want to drive my car and park it. And then I don't want to deal with that. I just want to be picked up and dropped off. Fair enough. I go in and I click Uber. And I go on my little cutesy Uber app and I'm like, How much how much is how much is this little cute Uber going to charge me here? What do you think they charged me on Uber? Uber charged me $45 compared to $125. When you're dealing with that sort of discrepancy in money, like why wouldn't I save $80 to have someone pick me up? They picked me up. You know what was inside the car? Mints, a phone charger. It was like set up in the center display. And I'm like, talk about good service. I call up a cab from the car company and I'm going to be in an extremely smelly either town car of some sort that smells kind of funny, that's probably 20 years old at least. And there's going to be no center display of mints and a charger. Now, granted, I didn't eat any of the mints or use the charger, but it's the thought that counts. It's absolutely the thought that counts. So let's go right into their earnings. They lost 68 cents a share over here. That was compared to Wall Street's loss of $1.58 a share. The revenues were 867 million. That was way ahead of the 809 million expected. The stock gapped up and then sold off. Okay. Let's talk about their future. They thought for this earnings quarter coming up right now that they were going to make 900 to 915 million dollars. Wall Street thought they were making $840 million. That's way ahead of consensus. Well, how about your 2019 revenue outlook with all the supposed drama that you're having? Lyft, the company itself, raised its revenue view 3.47 billion to 3.5 billion versus the 3.32 billion expected. They basically came out to Wall Street and said, in the worst case scenario, we're going to make 150 million more dollars than your average analyst thought about us. So they said their IPO news led to active rider growth in the quarter. So they're actually seeing more people using their service. And they basically, for me, beat on all the key metrics that they needed to beat on. And I thought the earnings were surprisingly good. And again, I was very bearish on the name. And after they reported, from the IPO price. And when they reported, they gapped up and fell down. Again, I was bullish in Uber, and that's trading similarly to Lyft too. So I want to just keep it in, a very fair and transparent context. For this Lyft, I'll be on the record saying that I'm bullish. They beat on earnings. They keep saying they're going to grow. Maybe they're wrong. Maybe they're right. We'll find out, but I am bullish in Lyft on the record. Okay. Next on my list is Celgene. And the only thing I don't want to do with Celgene is sell it. Let's talk about Celgene. I will be bullish on this name. Let me explain why. July 30th was the last time they reported. which was right over here, July 30th, right? Yeah, right over here in the pre-market. So they basically opened up flat after their last earnings report, and then the stock started rising afterwards. I'm very bullish in Celgene for the following reason. They raised on their last earnings report their fiscal year 2019 earnings 1065 to 1085 versus the 1060 to 1080 expected. They backed their earnings per share view of greater than 12.50, meaning we're going to make more than $12.50 per share earnings per share versus the 12.47 consensus. Their revenue guidance was 19 to 20 billion. The consensus was 19.17 billion, so they're still giving themselves like a little room on bottom to miss, but the average is 19.5 billion. If you want to just go in the center point of that, I will officially be on the record bullish on Celgene. Next is the maker of generators, and this is generic, and they took 15,000 of my dollars, so I could run the broadcast and have one of their generators, and it works great because the power goes out here every so often, and within 10 seconds, everything is back on again. So power goes out, you literally 1,000, 2, 1,000, 3, 4, 5, 6, 7, 8, 9, 10, boom, back up immediately. So phenomenally convenient. We had to use it 3 times already, so very happy with the service. Power is a very necessary thing for a trader. Let's just go ahead and talk about it. And I also want to mention with like all the drama with the Californian wildfires, people are buying generators. They don't want to have to rely, on Pacific Gas and Electric Company for their power when they're intentionally turning it off to avoid lawsuits if anything bad happens. Sounds horrible. On their last earnings report, Generic said that they made $1.20. That was ahead of the $1.08 a share. They had a revenue of 541.9 million. That's higher than the 538.9 million that Wall Street expected. And they raised their fiscal year 2019 growth revenue to 6 to 7% from 5 to 9%. So they raised the lower end. I don't know if those numbers are legitimate on the 9%. I think they raised it to 6 to 7 from 5 to 6. And the consensus 2.16 billion. What they didn't take into account there was PCG having more drama. And I know I'm just talking about one place. It also goes for like places that are being hit by hurricanes. The power line goes out, that's it, you're screwed. And again, ladies and gentlemen, sometimes refrigeration for some of these companies are necessary. For example, you own an ice cream shop. Do you want all the electric to go out in your ice cream shop? You're running a financial firm. Do you want your computers to go down anywhere in which you need a computer? Anywhere in which you need electricity for whatever reason to maintain a product? You need a generator. Not only that, people who run marijuana grow farms cannot afford to have their electricity go down. All right. So, with that being said, I think their earnings could be wonderful again. I am very bullish on generic, and I'm giving this 2 thumbs up. So just to go over the names again, just to be officially on the record, I'll just type them out so you guys don't miss any of them. I'll just type them out stupidly quick here. Very simple. Acadia, whoa, caps lock. Acadia long, Apple long, CREE short, LYFT long, Celgene long, Generic long. That's my official call. So I'm adding 6 names to the list right here. We'll see how they do. So now I want to talk about how it feels to give back 1.5% of your month on a trading day. And the truth is, in the beginning, it felt kind of bad. It felt kind of bad. One second. It felt kind of bad. And I want to sort of talk about that right now because I think it's, very important to discuss here. I think it's a very important topic to discuss here. And I can share the trades, and I lost over $1,000 today. And I know it's very unsexy to talk about your losses. And I thought it was important because I want to actually show you how I grew from this, how I grew from these losses, how I bounce from these losses, and how I really just ultimately treat these losses. And again, um, for my month, I'm up well over $75,000 for the month right now. This was my P&L from last week. Very simple. You could just see from October to October. Zero small cap, zero overnight risk, practically 99.9% of that money made in the first hour. I'm also going to be doing a webinar on Wednesday showing you how I achieve P&Ls like this. And believe me, this is not even close to like my best. It just started becoming a weird topic of conversation. People started telling me, like, asking me to show what I did. And my general response is, does it matter? Like, I'm helping so many people around me turn consistent. Does it really matter what I make? So I decided to start showing what I do when I take advantage of these markets. But I want to go into psychological toxicity, toxic trading, and just sort of talk to you about that right now. So, um, the greatest mistake I feel traders sometimes makes are they just sit there and they're watching the level two at all the time and that they trade too often. Um, there's a saying that goes, "Don't just do something, sit there." And how appropriate for the stock market in general as an intraday and active intraday trader. The most difficult thing for traders to do is to sit there and wait. Why? Because we're impulsive. We live in a society that is on a total dopamine, hypomanic binge. And this is really never more clearly manifested than by those who absolutely have to be in the markets at all times, desperately needing to be trading and simply cannot wait. They're human doings. They're not human beings, they're human doings. And at one level, this is a type of addiction to excitement, something that I know very well. I'm a gamer. I've been diagnosed with attention deficit disorder, which I use to my advantage if I really do have something like that. Many years ago, I think it's a nonsense condition. Wink, but that's just my opinion. I'm not a doc. I'm not a doctor, Jim. All right. But this is mediated in part by the neurochemical, obviously called dopamine, and it is the thrill of the game. And this dopamine just rushes down and comes from the anticipation of reward when you see a big name. And I felt I almost got sucked into that today. And I'm going to show you also how I bounced back from that and how I did better in that because I have to get in now because if the price is running away from me, maybe if I just chase it this once, it should be okay because it makes me feel good when I see the price going up. I see my P&L going up. It feels great. And I'm convinced that this is the one I'm going to make a killing on. Why should I wait for the price to come to me? Maybe it won't. And then I'll miss it all. And that's going to piss me off even more. There's no fun in that. This sounds all well and good, and the dopamine brain pathways which are activated by this potential for reward literally have more neurological activity and kick into high gear. The dopamine neurons are firing on all cylinders, and the feeling is one of pure exhilaration. It's all good and wonderful until it isn't. And suddenly the positions start to turn against you. You chased it, it came back in, and now you're looking at a drawdown. How do you feel? What do you do? Slap the like button if you can refer to any word I'm saying here. Slap the like button if I'm talking to you. I mean, I'm talking to me too. Believe it or not, like I could see my face on the screen. I am talking to me as well. Well, there's no fun in losing either. So the dopamine reward pathways of your brain shut down. And the brain connections that mediate fear start to begin to activate. And this is trader volatility. I'm showing you the science of what's happening while you're in these trades. And as emotions rush back and forth from highs to lows, your brain is going to be going obnoxiously wild. And markets do this to unseasoned and impatient traders who are greedy when they should be fearful, and fearful when they should be greedy. And the end result is confusion, frustration, depression, self sabotage, blaming, fighting with your loved ones, addiction, and systemic toxicity. All of these that drain the trader and leave you feeling empty, confused, disillusioned, and just plain worn out, exhausted. All right. So let's talk about what I did today and how this relates. Would you say that's a good idea? Okay. So I'm pulling up my charting system right now. And I'm going to show you my 9 chart layout and the names that I had access to trade today. And I was watching these names. I'm just going to remove my mug here for a second so you could see it. I was watching Beyond Meat, Grub, Google, Shop, Pfizer, ACAM, Merck, Kellogg's, and honestly, I was watching Facebook. I was watching Facebook here as well. But I was basically watching these names, and the whole point was I gravitated towards Beyond and Google. Now, there's nothing wrong with gravitating towards those names, except with the fact when you're an option trader, you're looking for more volatility. So what I did is instead of maybe trying to catch something going on in a Facebook, like maybe a VWAP reversal short, which I could have easily caught here, and I easily, because I know myself well enough as a trader, I could look at a trade and say if I would have lost or made money on it. Simple VWAP reversal, short here through 190.01, it's 189.55. That could have been my day. Instead, I went for Beyond. And I went for a VWAP reversal long on Beyond. In hindsight, it sort of looks okay here because if you took a full stop, you would have been in for the up move. I ended up with a loss in this name. And even though it blipped here, I ended up not getting in on this candle. I ended up buying on this candle and it spiked up 60 cents in my favor, only to pull down about $2 or whatever against me before I chucked it out. Then it went a little lower and then all the way back up. Then my next trade is I went for Google on earnings. In Google, I went for a Mark 5 short, which basically takes this candlestick right here and shorts it through 1263.12, right over here. I was up a little bit of money. The stock dropped a few dollars in Google. I sold 60% of my position, which I only, again, had 5 contracts. I was super light on this one, and I was also super light on the Beyond trade I lost on. Again, I didn't lose in retrospect a lot of money, but I actually suffered some psychological toxicity when 99% of the time I don't, which is amazing because there is a bad way to make money. And I am trying to explain to you, ladies and gentlemen, in retrospect, I start analyzing my strategy was solid. I don't regret the strategy I did. I don't regret how I traded them, but I regret the names I picked. Sometimes choosing the wrong name can cause psychological toxicity, and that is the lesson today. So on Google, I think I lost like 180 in Google, and between an overnight call and whatever, I lost maybe a little less than 700 on Beyond, and whatever. It was over $1,000 overall, right? I'm just sharing those names, right? And the interesting thing here to me was, I had 5 options. I sold 3 of them, like for, I believe it was, I'll round off about 60, 70 cent profit on Google. It sounds like a lot. I mean, they were expensive puts. And then I took a little loss on 2 of them when it popped up here, and I didn't write it all the way up here, but I took a loss on the remainder, and it ended up like losing me a little less than, or no, about, was it $250 I lost on Google? I can log in my system. It's not the point. I just want you to get the mentality down of what I actually did in Google. I was hoping with my final two puts when I covered some, or excuse me, sold some. I wasn't, short. I technically bought the puts, but I was looking for Google to break 1256.54, which was the day lows. I wanted it, of course, to get under 1260 and then break to 1256.54. However, had I decided to ignore these names and focus on a stupid Pfizer, on a stupid Pfizer, let's talk about in Pfizer. I would have taken a loss on today, on a Mark 5 long. I am sure, and I didn't trade Pfizer, but I know myself good enough to know that I would have lost money on this setup. So instead of losing on a Beyond Meat, I could have bought here through 1264. It would have ticked the day high, immediately gone against me. I would have lost 17 cents on a Pfizer, which is a much different feeling than losing a couple points on Beyond Meat. This would have been a healthy loss. I would have taken this loss, and I can already tell you, even though I didn't trade it, I'm talking about a hypothetical loss. I know I would have been psychologically strong. I know I would have been better prepared for the next trade. I would have been better prepared for any of the news flow coming in. I would have been better prepared across the board for anything that could have happened to me had I traded this name or this name, which I would have made money on, knowing myself, another hypothetical situation which I understand. And look, like it actually, it actually was a great setup. And I know it doesn't look like a lot when it goes from 190 to 189.55, but those 190 puts popped. And I would have easily made 15, 20 cents on a 50-cent drop in Facebook. And I easily could have taken 30, 40, 50 puts in a Facebook and make a quick 700 to a grand on a quick less than 5 minute trade. I could have done that. But instead, I went for this, which again, my strategy, sound, I can show you the results on Google. My strategy on Beyond, very sound. You cannot deny the phenomenal consistent hit rate that these names give, excuse me, that this strategy gives. But what I didn't take into account is the fact that Beyond Meat is a very emotional name. And as a result, it actually, by trading it, you are actually getting more of a psychological risk, psychological toxic risk than you would trading a Pfizer or trading a Facebook or trading a name that trades in a tighter range than a Beyond Meat. So my lesson for myself, I was trying to, when, I'll say it like, take it from the Street Fighter 2 World Champion. You see that little Street Championship edition, Street Fighter 2? I'm the world champion in that game. The way I got good at it was by losing games. People don't understand that when I was interviewed after winning the championship, um, how did you do this, that, how did you win? How did you know to do this? How did you know to pick a certain character in the game and whatnot? And I basically said my strengths are basically a complete compilation of all my losses. When I win in the market, like for example, the $75,000 I'm up this month plus, that didn't teach me anything. That just showed me that what I'm doing already is good. There's nothing to really learn for me personally, as I could show you and help you get to that level, perhaps, mayhaps, but there was nothing to learn from it for me. Only when you lose are you able to actually learn. Look at any aspect of life, anything. You ride a bike, you fall, you get hurt. You get up, you ride a bike, you fall, you get hurt until you know how to ride. Look at ancient samurais, how they trained. They would pummel each other with wooden sticks to where they had bruises all over their body. That's where Kobe beef originated from, by the way. From Kobe, Japan, the samurai would wear the meat as armor, like beef meat, as armor when they hit each other with the sticks. Look at anything in life And the only way that you have really learned is by either losing or suffering. And if you look at, I'm not saying anything with anything, but if you look at some of these people these days who grew up in families which just never told them no, never told them anything was wrong, and gave, their kids every single thing they asked for, they turn out to be peculiar individuals who almost seem not ready for the real world. And I know that sounds a little weird, and I would never wish my upbringing on my own kids, and nor would I ever give them. I think everything in life almost has to be a sort of yin yang balance. It sounds kind of weird because as a consistent trader, I'm rarely losing, and that's good. But when you do lose, I think there needs to be a silver lining. And I was working all night to find this silver lining for what I could do different to improve. It's not changing the strategy, it works beyond wonderfully. Maybe one of the most consistent strategies that you could apply out there. But the names, I don't need to trade the two of the most, Beyond and Google were the two craziest names on the board today. And I could have done a better job, excuse me, with name selection. And that was my lesson learned. So, yes, not all money in the market is made or lost equally. There's good losses and good gains, and bad losses and bad gains. So, what I'm trying to do is focus on names that will not give you a lot of psychological toxicity from losing. And if that was my goal early on, there was no reason for me to trade. Even let's say I sold all my Google and made money after it dipped down and broke down a few points. There's still, even in hindsight, no reason to trade this name or Beyond when I had such a plethora of better options. I'm going to go exactly through on Wednesday's webinar how I go through things. We have a free webinar. There's a link within the description. I know I'm going to see a lot of you guys there. It's going to be a promotional webinar, but I'm going to try to add as much value as I can through it. Again, link in the description. Take advantage of it. Slap the like button if you like talks like this. I hope you guys enjoyed the Newsbeat show. Happy trading, make money, and I'll see you guys tomorrow on the Newsbeat live trading broadcast. Have a wonderful evening.